Welcome everyone to the trade setup. In this video, we are going to discuss whether the stock market is headed further down. Are we going to see a crash? Is there an opportunity to dip buy? When is it? When do we dip buy? Where do we dip buy? We're going to dive into all of that in this video. We'll go over three things. Number one, for this coming week, we'll talk about the economic data points that are coming out. Number two, we'll discuss some historical data on how the stock market has behaved in very similar environments. And then we'll dive onto the charts to see where are the potential areas we can position ourselves for the next bull run. All right, so let's dive right into it. As a reminder, Trade Setup is not a registered security broker, investment advisor, or financial advisor registered with the U.S. Securities and Exchange Commission. Nothing that is said on this particular video should be taken as trade advice or investment advice. All right, so let's dive right into it. The first thing we want to talk about is what's happening in the market as far as the economic data points that are coming out in this coming week. Well, off the bat, one thing we should note that Monday, February 21st, the markets are closed. So this coming week is a very short week. You only have Tuesday through Friday. If that means you're trading options, the premiums are likely going to decay much faster than usual. Okay. On Tuesday, we'll have consumer confidence data coming out. GDP, this will be a pretty interesting one to kind of see if the economy is running hot quarter over quarter for Q4. Jobless claims, new home sales, crude oil inventories. Again, another one to kind of keep an eye on. Oil has extended quite a bit over the $90 mark. On the charts, it does look like it's starting to pull back, but with news of Russia and Ukraine conflict in just a couple minutes ago, it does seem like we might get another spike. Okay, so something to kind of keep an eye on. Let's see, Friday we have core durable good orders month over month, pending home sales, and then Fed monetary policy report. So some things you want to kind of keep an eye on. These tend to move the market up and down depending on which sectors they affect. Okay, so now let's dive into the second bullet point, and that is, what are we expecting the stock market to do exactly? In the beginning of the year, at the trade setup, I provided a clear insight that after the Q4 report, Q4 earnings, we're going to start seeing weakness in the market. And we started seeing weakness a little bit before Q4 earnings, primarily because there was a lot of talk about inflation, and we never got to see that inflection point of inflation coming down. It just started getting out of control. Transitory just became another word, and so things got a little bit out of control. And the best way to control inflation, historically, is to increase interest rates. And as we know, through the pandemic, interest rates were very low. And so there was a lot of borrowing happening, investing, and so the stock market kind of was propped up by the Fed pumping money into the economy. And now we've kind of went to the extreme end of it with inflation out of control. So what I want to now talk about is exactly how to position ourselves into the next bull run. Okay, so a little bit of research kind of going back into what historically has happened. So history shows that in the last 8 first interest rate hikes, the market over the next 3 months has increased by 2.5%. Okay, there's a 50% probability. So N of 8 is basically saying there were 8 separate occasions historically when we had interest rate hikes. Okay, so 4 out of those 8 occasions, we had an average of 2.5% increase over the next 3 months in the stock market. Okay, over the next 6 months, we had a 7.5% increase. or 6 out of 8 of those times. And 8 out of 8 times we expected, and it showed a 10.5% increase over the next 12 months. Okay, so this is pretty interesting data, right? So history is telling us that typically after the first rate hike, we should see the market start to bounce back. But kind of going into the rate hike, the market tends to come down. Okay, so this is something to kind of keep in the back of your minds. After the first rate hike, that the market generally tends to go up. Okay, the second kind of major indication that we need to look at is this is midterm election year. So typically, history shows that we see weakness in the first quarter, and then there's an uptick after March and a mid-year rally. So from March to roughly like August, September, or even into a little bit into October, we start seeing a rally followed by another dip that happens in the third quarter before another rally going into the fourth and Q1 of the next year. Okay, so this is the second thing to kind of keep pay attention to is that we are in midterm election years. The third one that kind of throwing a curveball right now is this Russia-Ukraine conflict. And recent news headlines are saying Biden says that Putin's planning to attack in the coming days. So there's already kind of fear in the market about this potential war, and so it could further push the market down. Okay, so overall, when we think about these three major bullet points right now that are kind of driving the market right now, it's overall pretty bearish, right? You have the seasonal environment, and what I mean by that is the midterm election years where you're seeing weakness in the first quarter, and then you have your economic data, and by that we're talking about the inflation and how the increase in interest rates is there's a fear of that, and usually that fear will subside once the interest rate is underway. And then the third is the world event, which is this Russia-Ukraine conflict with a possible war coming. Okay, so all these three things, very bearish. Not a whole lot of positive catalyst to prop this market and let it go higher. So there's a little bit of a silver lining, and that is there is an opportunity incoming to invest and position for the next bull run. So, while the common perception is, panic, everything is, just burning, world's coming to an end, market's going to collapse. I think the best way to kind of look at is where's the market, if the market continues to pull back, where are the good opportunities? When is the good opportunity? And based on what we're looking at all around here is, well, if history shows us that after the first rate hike, right, we have an increase in the stock market, and the first rate hike is going to happen in March. Okay, so keep in mind March. Midterm election years, history shows that we see weakness in the first quarter, and then uptick after March through October. So in this particular scenario, we see an uptick starting in March. Okay, this is a little bit of a curveball, so we got to kind of keep an eye on this to see how long it lasts. But if we combine these two very particular things, okay, and we think about that the first rate hike is going to probably be 50 basis points coming in during March, and everything tends to starts to rally right after March, then at the current moment, it's a good way to think about, well, maybe March is when we want to start thinking about investing and putting cash back into the market. So, now let's kind of take a look at the charts and see where we need to look at as far as price levels concerned. So we know when to look at, right? So we want to look at towards the tail end of February, first, second week of March. We want to start looking for signs of the stock market curving back. Now, that being said, we obviously don't know what's going to happen with the Russia-Ukraine conflict. We don't know any other events and unanticipated events that could affect the stock market. So based on just the historical data and what's available as of today, I'm targeting for second week of March to uh, start dipping my toes back into the market, buying the dips, trying to see what's on sale. Okay, so let's look at the charts next. Okay, so off the bat, we're going to start with SPX. And in this one, I'm not going to put out option plays, buy calls above this trigger level, puts below this. I'll post the plays Monday night in the Discord. In this video, I'm going to strictly keep it technical. I want to talk about technical analysis. I want to talk about how to look at the market from a different perspective, right? So, very educational video here. All right, so let's get started. SPX, this we had we're starting to form an H pattern. We talked about this last week, so I'm gonna overlay some of the levels that we were talking about last week. Kind of regroup here. So we opened here on the 14th, I believe, right? So 14th we opened right here, and I made a note in the last video that we're probably gonna see a rally Monday. Monday into Tuesday. Tuesday we get a pull back. Take a look at what happens on Wednesday. If we break below this 43.94 level, puts can work below, right? And so we saw a push. We saw Monday kind of a red day, but held that 43.95 area. Tuesday was a green day. That's when we started testing a full green candle. And so the bulls tried to take it another notch, and then it failed on Wednesday. And so right at that level, I talked about potential shorts, right? We saw this double top. This was the neckline. And so this was a retest or a back test of this neckline. And we failed to kind of hold this level. So once we started failing below the wick of that Wednesday daily candle, we started pulling down. And then on the daily, we closed below this level, and then puts could have worked all the way down from 4395 all the way to 4324.05. So pretty easy kind of read there. This week it's going to be a little bit different, and I'm going to show you exactly what we're going to look at right now. This week, all eyes are going to be on indexes, SPX, NQ or QQQ, and IWM, more so than the stocks themselves. Now, there have been sectors, and I'll explain why the major focus is going to be on the indexes. There have been sectors that are doing well. Energy is doing well. Financials are doing well, right? So if we look at XLF, we're not really off the highs that, far off that high. If we look at energy, XLE, doing pretty well, right? We're near the high. So certain sectors are doing well. Gold is also doing pretty well. So not too bad, but let's talk about SPX. So SPX is going to be a main watch this week. And the reason why is what we're starting to form is what looks like a head and shoulders pattern. Okay, so if I'm on the weekly chart, if you pay attention to this right here, and if we are to put our neckline, we can, let's say right there. I'm trying to align it as best as I can, but what we typically do is once we have our macro analysis done, we'll overlay algorithm levels, and then we'll fine tune our entries and exits. So I'm not gonna show you algorithm levels in this video. I'm going to go over macro analysis, and then if you're a platinum member, you'll get access to those levels, plays, and everything in between. So this is your head and shoulders pattern. If this neckline breaks, meaning do we start seeing a close below this 4280 range, right? If we start seeing a close below the 4280 range, the market can start flushing. And the reason I brought up XLE and XLF is because those particular sectors are doing well. When this level breaks, the entire market is going to come down. The reason is this is a very key area to hold right now. And if this area starts failing, we're going to have a broader sell-off. And so it's not going to matter if you're situated in financials and energy. The market is going to pull back because we're starting to basically break a bigger setup here on a weekly time frame on a very major index. Okay, so tech is likely going to take a big hit, but overall the overall market is likely going to come down. So the question then becomes is where do we position ourselves? So now we know the market is it's a bearish setup. Now, that's not to say that we're going to break this week and just flush all the way down. There could be small bounces, and if there are, here are certain things to kind of look for. Number one, let's flip back to the daily. Okay, so what we want to look for is, are the bounces getting weaker off this level? We've seen this bounce, right? This bounce, fantastic. Came back down here again, we got another bounce. Not bad. Not as strong, but not bad. Well, if the price comes back down here, this week, what kind of bounce do we get? Do we get a bounce? Is it 50% of this one? Is the next one even 50% of the previous one? And so the question is, are we going to form sort of a descending triangle before the breakdown, or are we going to close and just call it quits? The market moves down. Hard to say at the moment. It's best to watch price action. What I do think is if the market does come down and the price does test this 42.80 level, it's not the best idea to just buy puts on the first crossing, right? Very likely the buyers are going to hold this particular range one more time. Because the moment this level breaks, okay, sellers are in full control. And so the buyers will do everything possible to hold this level this week. Okay, so now let's think about this by overlaying our levels. These are not algorithm levels. These are bigger levels that trade setup members get. And so this is why I've kind of highlighted the 42.80-25 range, right? This is the level we have on our charts, and we've seen bounces here before. And so this is the level we're going to look for. If any time this week we see a daily candle close below, not the best sign, okay? Possible we start seeing things come down. And so where's the stop? Well, psychologically, I would think here, right? So my thought is that zoom out just a little bit. My thought is we go for this gap fill, this tiny little gap. There's a little bit of structure right here. So around 4,000 to 3,900 range. Okay, now that's quite a move down, right? So if we're talking this, quite a big move. And why exactly are we talking about that low of a level? Well, we're thinking about a head and shoulders pattern, right? If we're talking about something like this, there's our head, there's the shoulder. Okay, and then if this is the neckline, well, the top of this range to the bottom of this range. Okay, so I'm looking at the net difference in the price movement within this head and shoulder. If I were to take this and kind of push it down, well, the most extreme end, we're coming down here, right? So here is a secret demand area. where price has bounced. Okay, so technically speaking, can we go down this low? Yeah, if we're talking pure technical analysis, very, very possible, right? So keep an eye on this. Everyone this week, I know most traders are looking at this as a head and shoulders pattern. They're looking for the breakout, and if you ever trade head and shoulders pattern, technical analysis says that typically the net delta difference in the head from the neckline is equivalent to the expected move post the breakdown of the head and shoulder. So if we were to kind of look at that, kind of puts us right here in that 3,800 range. I do think we are going to start seeing a bounce maybe a little bit earlier. We're gonna walk. I'm gonna watch to see how it holds around this area. Okay, so watch round numbers, 4,000, 3,800, 3,900. Those are the kind of levels you want to kind of keep an eye on now, on the bigger time frames. Okay, let's look at QQQ. So QQQ, very similar in the way it's looking. You got a nice little H pattern. We're making lower highs, lower high, and then lower lows, right? So this week, can 338 hold, right? 337.39, can this area hold? If it fails, then we're going down to 330, 323. For the upside, I would basically wait for 370 to break. And one thing I kind of forgot to show you, I want to go back and just quickly show you, is if we go back to the weekly time frame, okay, we go back to the weekly time frame on the SPX. Look at these strong rejection candles, right? This is a weekly. So this is telling you that there's not price acceptance in this range. Over the last 2 weeks, okay, well, this was previous week, but the first week of February and the last week of January, you can see that there's not price acceptance in this 4,500 range, right? Above 4,500, we're getting a nuh-uh. This is not worth it, right? So we're getting a lot of short sellers. We're getting profit takers within this range. Last week, we kind of saw a similar pattern. Try to break higher again. Now we're seeing rejection again. So price acceptance it's not happening in this particular range. When you see these types of candles, okay, the first thought is always, well, are we going to see a continuation down? And to think that is completely normal, and I think you should. Look at it in a way where, okay, well, if I were to take the highs and lows, and if they break the lows of this particular candle, it's easy to say we're going to go continue down. But the more profitable setup, okay, the more profitable setup is a squeeze, right? So you see a massive movement up. If we see a break above the 4580 level, this thing can run back to all-time highs. Why is that? Well, see all these sellers and profit takers here? There are a lot of short sellers, and they're short selling the market right now. If buyers step in and overtake this range, all those short sellers are going to be forced to close their positions at a loss. Okay, so it's going to cause a stop loss run, and a stop loss run towards the upside will cause a massive squeeze all the way back to all-time highs. Okay, so I'm not saying it's going to happen. What I'm saying is be open to the possibility, and when you see these types of candles form on your chart, you should think about, well, where are the A+ setups? Where can I get the most money out of the investment that I make for a particular trade? Okay, the risk to reward. Well, the risk to reward on this break is fantastic. Okay, fantastic. Yes, there's risk to reward on the downside as well, but over here, fantastic. Okay, so let's look at QQQ. Similar, right? You see that double top right here. Major big wicks. So above 370, best place to play calls. And I believe last week, that's kind of where we were looking at. So last week we were looking at 348.93. So these were quick plays. If we go back into the daily, probably make more sense. So here's Monday. We're looking for this break to play calls right above, right? So it did rally, and then at 350, 334, we talked about sellers coming in to bring this thing down, making a lower high, and that is kind of exactly what happened, right? So 350 puts below 353.37, which is right here. And so if you bought puts on this weakness, that was a nice 13-point move that you caught to the downside. This because it's no longer valid. Again, this week, I'm purely technical. I'm going to read the charts and kind of tell you what to look for. Okay, so that's QQQ. Pay attention to NQ and NQ and QQQ. If you want to trade NQ, QQQ is probably better, but NQ, just keep an eye right here, right? So 13,900, so 14,000-ish. You want to keep an eye on this level this coming week. Same concept, same setup as SPX, right? We don't want this breaking. The moment this breaks, we're flushing down, okay? We're coming down, and if we look at it on the weekly, very, very similar, very similar. Very similar head and shoulders pattern forming, right? So we're below the neckline on this one. If we're kind of considering this a neck and head and shoulder. It's kind of diagonal. We may continue breaking towards the downside. There is a secret demand right here, right? Secret demand zone. And then it's acted as previous supply zone turned into demand zone. So this is kind of where I would keep my eye for NQ if you follow NQ. Okay, but on QQQ, this one we have to take it one day at a time. Okay, so as of right now, can 337.40 hold, right, this week? Can this area hold? That is the key question. And if it starts, same concept, if we start seeing a daily close below this level, we're going to come down. We're going to start making our way down. I'm not exactly sure at what accelerated rate we're going to come down. Okay, but keep an eye. First, keep an eye on this wick at around 333. Possible to see another buyer show up again, because again, they don't want they don't want seller control. Below this, it's pretty much game over. Okay, seller's control. So watch that. Watch 323. This is where I would start to expect buyers to hold. Okay, so 323.12. This is where I would expect this week. If we flush down, this kind of range is where I would expect buyers to kind of step in. Okay, if this fails, then we're heading down to 323.15. All right, so we're heading down right here to the next level before buyers show up. So these are the two levels on the bottom end. I would kind of keep an eye on to see if they hold and potential if we can get a little bit of a bounce, right? If we come down that far. So keep an eye on these two levels. Keep an eye on 337.40. Keep an eye on this wick. We start closing below, possible to see 323 this week. Okay, so it's quite a move down, but again, it's based on the current candle movement. It's not out of the question and not out of range. Okay, let's talk about Apple. So I talked about Apple. Apple's a stock that's been very, very resilient, and I think what's happening, in my opinion, is a lot of investors are using it as a safe haven, right? Yeah, gold is kind of spiking right now, and people are moving into gold and stuff, but Gold tends to, yeah, it's a good store of value. No, it's not bad. Um, but it's not great. And I think what's happening is a lot of movement out of some of these tech stocks is going and filtering into Apple. That's why Apple is holding its ground. Okay. So what to look for in Apple this week? Well, can can the 167.82 area hold? Right. So right now, as of Friday, we closed below it. Closed below it. So if this area starts acting as resistance comes Tuesday, we could start seeing uh, some downward pressure, right? So come Tuesday, we start seeing 167.82 resist, then puts can definitely work below it, but best to watch price action. If we get some very negative news, let's say we gap down Tuesday morning, we're gap down right here. If we see a gap fill and a rally in the morning, this could be a good area to go short, right? We've seen this area hold here, act as resistance, turned into support. Once below it, acted as resistance, blasted through it, acted as support. Tried to act as support, but not really on Friday, kind of closed below it. So now I would expect this level to be a resistance or a supply zone. Watch this thing for more downside. Okay, so if we can't see uh, Apple close back above 167.82, I think we're in for more downside. And below 165, we can see 162, 160. 160 is kind of where I would peg it for the week, at least, unless we get some, really crazy news. Keep an eye on basically this area right here. So not a bad area to kind of watch. This is a good area to watch and see if the price holds, right? Possible to see this area hold. If it starts breaking below, then 155 is next. So right here. At this point, this is where I would start considering a bounce play at 150. Below 160, we could start seeing a massive quick move down to 155. Okay, so watch 160, watch to see if 167.82 is the resistance, to see if we get a downside move. Don't really see an upside play. Probably just wait for 177, right? A lot of rejection, rejection, rejection. Wait for 177. If you want to be exact, well, 176. Yeah, right around here. Start waiting for that area to break, and then we could test easily all the way to all-time highs. So, not seeing great trades to the upside right now. Trying to see how the downside's going to play out, where the bounces will happen to take advantage of quick calls during day trading. Okay, so that's that. Let's look at AMD. AMD. Okay. So, this thing again, it's looking very similar. It's all these stocks, they're making lower highs and lower lows. So typically, what's next here? Well, if we're zooming into this, got a nice little base rally there. If we're zooming into this, right? Um, the area I would now pay attention to for any sort of buying is the $100 level. Okay, and so um, I believe that by March at least, we could just linger around here in the $100 range, which is not bad. Not bad. AMD is a great company. It would kind of be a nice opportune moment to take advantage of it. So, looking at the overlaid levels, macro levels, I would start looking at AMD this week. If we continue to see weakness below this 111 mark, possible to see this thing come down, right? We could see 107, even 103. Gap fill here, right here, we gap fill. Come down, see 103. So is it possible that we bounce off 105 right here after the gap fill? Yeah, very likely. So keep an eye on this level. I believe we could go for a gap fill on this weakness. So not out of the question. If after the gap fill we continue down below 103, easily we can drop down to 98 range. Okay, so 97, 98 range, right in this area. Possible to see the $198 range test again. So all this is not out of question. Keep an eye right here, right? We have this gap fill pending. So possible to see it come down here and do a gap fill bounce. If it gap fills and just continues down, this is kind of an area where I would pay attention to next, right? So we've held here before. Do we come down here? Our buyer's still sitting here. This is where my bet would be to go long, right? Play a bounce right here. Okay, let's look at Amazon. Amazon. So Amazon still needs the gap fill, and I think the best put side is basically right below this 3,000 level, right? So we're looking at 3,000. Yeah, right here. Let's look at this. We have a gap right there, unfilled. Okay. So right now, the market is holding this as gap support. If, for example, the buyers are no longer here, okay, so if we start printing below the 3,000 mark on the daily, we are going down. We are going to go down, so I think there's a good put play here below 3,000 on Amazon towards 29.20. Okay, 29.20, 29.24. That is the area I would kind of pay attention to. And then below that, 28.75 is roughly where the gap is going to be filled. This 28.71, 28.75 range right here. We could start seeing the gap fill complete there. Well, naturally, we'll see the gap fill complete. So far, there's a nice little bearish setup here. Okay, so pretty easy setup. Puts below this. This is your take profit, and I would set this as your stop loss right here. So quite a big stop loss. If you can't digest this kind of risk, probably best not to trade a big ticker like this. But you could see that it's almost the risk to reward is almost 2-to-1 based on the way the levels are kind of set up here, right? So roughly. So maybe 1 to 1.5 here. 1 risk to 1.5 reward, but again, if this is not your type, then best to kind of stay away from it. Okay, but definitely worth a watch below 3,000 psychological level, and gap fill incoming, so puts can work below. Okay, let's look at Facebook. This was a really fun one. On Twitter, we called out 2620 multiple times last week, right, on Friday. Beautiful bounce. I will mark this one more time because of how amazing our algorithm is. I want you to look at the number of times. Look at all these bottoms forming, right? We had a lot of people on Twitter buying puts below the 207 mark, below 207. So a lot of people bought puts. They claim to have made money, which is great if you did, if you took quick profits, props to you. But there was only $1 move down, right? A $200 stock, there was only $1 move potential down because um, we knew because of our algo that 206.20 was going to hold. And look at the number of times this thing made a bottom, multiple bottoms. I mean, incredible, right? We broke down and we came right back and we closed right there. So this shows you the power of our algorithm, all right? And if you don't kind of understand or didn't know about this, follow us on Twitter. We post these things before they happen, right? Not after, before they happen. All right, so I'll go over the little Twitter post later to show you guys the timeline of when we posted all this and how it's worked out so far. So let's clear this and just talk about the charts as they are right now, which is not great, right? Facebook is just it's been in a downtrend ever since earnings. Every time there's been a pop, we're just making lower highs and lower lows. And so the trend is not over towards the downside. It doesn't look like we're starting to base out yet. We thought that this might have been the bottom right here at 216, but clearly not. I think the market is continuing to drag this one down. And the one thing that is always overlooked is when the market is weak, the stocks that dump the fastest continue to dump the fastest. So when the stock market is weak and the stocks that hold their price levels, meaning they're resilient, those are the first stocks to rally when the market rallies. Okay, so these are some key things to kind of keep in mind that right now, because the market is in such bad shape, Facebook, which is already in a very bearish move, is taking the hardest hit. Okay, and it's not surprising. And if you look at Apple, right, if you remember looking at Apple, Apple is very resilient. So when the market turns back around, Apple will be the first one to rally. Okay, so something to kind of keep in mind, like when you're trading. So Facebook this week, what's going to happen? What are we going to look at? There's not really much upside to this stock. Kind of best to just watch it. I don't see any trades setting up. This is a very, very bearish looking movement. For it to draw trend lines and wait for trend line breaks, yeah, there might be something, but based on the way the market's behaving right now, we really need a strong positive catalyst for this thing to turn around. Is there a gap fill potential? Absolutely, right? Above 243.98, this particular level, anytime this year, if we start seeing a gap fill, this is going to be a fantastic trade all the way up to 292, 300 area, right? So wait for the best setup is actually to just kind of wait for this, right? Keep an eye on this for the year. See, like wait for March, wait for the first rate hike, wait for the Ukraine Russia conflict to subside, midterm elections, all these things. It looks like we're lining up for more downside up front right now, and then likely we're going to see a little bit of an uptick starting in March, right? As of right now, the way things are looking. So after March, kind of start looking at this level, see if the gap fill potential is there, and this will make for a very, very nice trade towards the upside. Is Facebook a good buy? I like the company, but it took a really hard hit because of the way Apple is structuring their um, ad space, right? So uh, that, and I believe Google is doing something very similar. So that's not really helping. Um, is there potential for this company in the metaverse? Absolutely. I think they're positioned well. Um, if you don't care about, quick returns, uh, this is this is a giant, right? Facebook's a giant. They're a very strong, good company, great business. They're set up for taking on the newest innovations that the markets have to offer. And yeah, so getting it at these price ranges it's honestly a deal. So yeah, it's a good one, but that does not mean I would go I would put all my cash into this, right? So dollar cost average is typically the best way you want to go for long-term investments is keep buying at each level, right? So if we know the market's coming down based on the way things are playing out, then uh, probably best to kind of see what happens. Wait for beginning of March, see if this thing starts turning around, and then consider an investment, right? So right now we're going to clear this and kind of teach you something. This right here is the current pattern, right? This is the current pattern. Any trader can look at this and say, hey, we are making lower lows and we're making lower highs. This is a downward pattern. Now, every time this happens, and the common urge is, do I buy? I'm buying the dip. You're not buying the dip. This is not buying the dip, okay? You're not buying the dip. X that this is not buying the dip. This is buying, you're buying a downtrend. This is a downtrend. Talk about what buying the dip means. Okay? Buying the dip means, well, is this downtrend over? How do you tell? Well, are we forming any sort of a bottom, right? Are we forming a double bottom, triple bottom? Are we basing out? Like what's happening? We need to see a bottom first. Right now, I don't see a bottom. This thing's coming down. Once it starts forming a bottom where you start seeing uh, a certain price, you start seeing demand at a particular price level, okay, and you start seeing a double bottom, heck, even a triple bottom, and you see a breakout. After the breakout off the neckline, okay, you see a breakout and the pullback. On the pullback here, right here, is where you dip buy. That is dip buying. Okay, you're buying the dip on a stock that is clearly headed up. You're dip buying here. Okay, so very important to understand. New traders kind of keep saying things like, I'm going to dip buy. You're not dip buying. You're buying a downtrend. That's why the dip keeps dipping and you're running out of money because you think you're dip buying because you're not dip buying. All right, so pay attention to that, like that, what you're doing. Um, the proper way to dip buy is what I just showed you just now. Okay, this is catching a falling knife, and eventually you're gonna run out of cash saying that you dip bought, not dip buying. All right, so going back to Facebook, keep an eye on this week 190, 185. So kind of just mark those levels. There is a little gap here. Could we go for a fill? Sure, why not, right? Like we could see a gap fill right here. But as far as our algos are concerned, keep an eye on 190, 185 range. Okay, so right around here. This is kind of where our algo's saying we might need to hold here. All right, so keep an eye on that. As far as the major levels are concerned, kind of looking at the similar range. the 193, 190. Now, is there a trade? I don't see one, so I would kind of stay away from this guy. Okay, Google, very, 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 very sad price movement. We saw this thing gap up very nicely after earnings. It briefly cracked 3,000, which it just hasn't for the longest time, and then just absolutely sold off, gap filling, and then even further, right? So um, we're seeing lower lows, lower high, lower low, lower high, lower low. Do we see another lower high followed by another lower low? Very possible. Okay, so Google this week, again, this is the area we were looking at last time. Buyers showed up. Buyers did not show up here. All right, so not a great sign. So this week, watch 2623. All right, so can 2623 act as resistance? Right, now that we've broken below this, and we've seen this area held as a demand zone. Now it's turned into a supply zone here. Once we broke above it, we kind of stayed above it, we broke below it. Now, do we stay below it? Stay below it, we're coming right down. Okay, so how far can Google go? Well, you know, I would probably watch it here. Next place the buyers would be situated is the 2,500 mark. Right, so keep an eye on this. If we start to see this level act as resistance, puts can work towards the downside on this guy. All right, so a little bit brighter, a little too bright. Okay, so watch this level. Puts below can work towards 2560 and then 2500 before we see bounce. So keep an eye on this particular stock. So possible to see this thing come down, bottom one more time. We could get a weak bounce here. So calls can work at this particular range. There's a little bit of structure and a hold here, structure and a hold right here. So keep an eye on this particular level. You could play calls. Quick trade though. All right, let's look at Goldman Sachs. Same kind of ordeal. We talked about this, right? We talked about the put below 358.91 last week, and look at the beautiful, beautiful red candle we got, right? It was a very easy setup that we talked about. Resistance turned into a rally-based rally, and then it tried to hold and just absolutely broke. It broke on Thursday, bringing it down all the way to 350, which is our level. Kind of held there, and then we bounced around in between 350, 344, 33, 350, which is what we were talking about. So a very nice play, right? A very nice play to the downside. The upside is still valid, right, above 376.97. Very easy to play that. You can see that is very, very tough range right now to break. This is going to be a tough level to break. So above that, we could see a massive push. But until we get to that area, I don't really see anything to do. This week, keep an eye on 344.30. If this breaks, we're coming down 335, even 326 before we start seeing some sort of a bounce, right? So 330, keep an eye on. Keep an eye on 335, 330, right? Like the range. I would watch basically right here. We've seen bounces happen. So anywhere from right 331 to 336, just kind of keep an eye on in this particular level. So puts below 344.30 can work all the way down here, and then expect some sort of buyer stepping in to cause a little bit of a bounce. All right, let's keep moving. Let's go to Microsoft. All right, Microsoft, same kind of ordeal. 290 puts below 294.34. Yeah, pretty nice play, right? Like we rallied. Similar play to QQQ and SPX. We saw a nice push up. It hit the neckline of the double top and then just push back down. On the second breach, it was a nice little put play, right? So that's what we were talking about. What's next for this stock? Well, let's take a look. 290, right? 289.38, closed below there this week. This is the area to watch. Can we get back above it, or is this level going to act as resistance? Right, so this is the level to pay attention to this week. If we start seeing weakness here, okay, very easily we could see 281, even 277. So puts below 289.38 can work on weakness, right? So keep an eye on this. Easy to play puts, and then keep your stop loss above this particular level. So puts below 289.38, target 281.36, 277.84. For the upside, again, wait for 315. It's far away, but based on the accumulation that's happening and the rejections that are happening over in that particular area, a break above 315 can send this to 323 and 336, near all-time highs. NVIDIA, something I was trying to show our members, but bull flag, right? That's what I wanted to show. We're seeing a bull flag. So typically bull flags, you know, if this is the bull flag, well, you know, what if we're looking at this, is this the break? Right? How far low are we going? Right? So here, I'll draw it this way. Even draw it this way. Quite a big drop. Am I expecting that? Probably not. But you never know. What I do think this week though is, you know, what to do exactly. So if we look at the weekly, not a great sign. And we kind of talked about when we look for these patterns, what to look for. We want to see a break above this, right? So above 270, when all these sellers and short sellers are in the market, short selling this particular stock, you see it on the charts. When it starts breaking above their stop losses, it's going to cause a stop loss run and a flip of a switch to the upside and a quick rally back to the all-time highs, right? So definitely, right, you could see a downtrend playing out. Very, very clear. So what's next? Well, very, very likely we're going to see movement all the way down to 220, yeah, even 200, right? So this stock, it's a great company, and because of supply chain constraints, and you know, I know NVIDIA, AMD said that they're easing, but also because of Ukraine and Russia tensions, this particular stock is taking a bigger hit than a couple of the other tech stocks. So kind of overlaying our levels. So last week we had this play, right? Go into the daily, it'll make more sense. So we had 230 puts below 239, and this was kind of the play where we saw a hold of 239.24. We broke finally on Friday, came down, hit 231.39 and bounced, right? We got a small little bounce. I think it's worth a shot to look at the put play one more time at this level, right? So suppose we get another push higher Tuesday, you know, this area can act as resistance because it acted as a very strong support. That support broke, could act as resistance and a potential good area to short it. And then below 231.39, this thing can come back down easily to 219.44, 219 like 40 range right here. So I would expect to see this area hold briefly on any type of wild movement down. Right, so if we just just call it quits and the market just decides to flush, this is where I would watch price to hold for at least a bounce. Right, this is an area I would kind of keep an eye on this week. Below this, possible to basically see 200 level. Okay, so I'd watch for 219. Below that, 206, 200 level, very likely quickly. Okay, if we start closing below this on the daily, we're going to see a quick move within a day, day and a half down to 206, 200 before we see another bounce. So keep an eye on this. Watch to see if 239.24 acts as resistance. Below 231.39, easy to play puts all the way down to 219.44 before we see a bounce. Okay. That. And then finally, let's talk about Tesla. Everyone's talking about Tesla. Honestly, a very fun stock to trade, and it hasn't been recently, right? Typically, if you're good at technical analysis, if you're good at identifying good volatility, it's a really profitable ticker to day trade. But so far, we haven't gotten anything from it. A lot of consolidation and really not much movement, right? Just a lot of sideways action. The easiest trade, off the bat is right here. Above this 245, 247 level. This is where everyone's watching. Rather very large accumulation in this particular range, right? If we were to just kind of mark this, let's just call that right there. Maybe a little higher to account for all these wicks. 947.24. Above this accumulation, we could rip higher, right? We could just see multi-day rally towards the upside. But we've attempted multiple times and failed. Okay. Well, each time we've just been met with sellers. There's absolutely no price acceptance. We need a very bullish and positive catalyst to kind of run this thing high. Now, also taking seasonal into effect, typically February tends to be a down month for Tesla, right? February going into March, typically a down month for Tesla. So after that, it starts to rally towards the tail end, mid-March, tail end of March. So again, Tesla, I think, will be ready to trade towards the upside. If Ukraine-Russia tensions ease, we're done with the first rate hike and we start seeing a pushback higher. Specifically, we start seeing higher highs, higher lows forming. Tesla will be a prime candidate to trade above this 947 range. As of right now, I don't really see any trades to the upside. I mean, keep an eye on basically 800 next, because it's possible, right? It is absolutely possible to see 800. So it broke 868.35. Yeah, I'd watch 800 this week, psychological level. Possible to see it come down into this range and bounce. So I do think 800 is next for the stock. I'm not sure the best way to kind of structure this trade. I might go into the algorithms and fine tune entries based on levels, but on these macro levels, I really don't see a trade towards the downside based on these levels. So I'll keep you guys updated in the Discord chat for all you platinum members. On the upside, just wait for this accumulation to break out, right? We want to see a break above this accumulation, and then this will be a massive multi-day rally, A+ trade. Everyone's going to be on it. Something to keep an eye on. Okay, so with that, I want to thank you guys for taking the time to listen to me. If you have not done so already, please follow us on Twitter at options_setup. We provide alerts way ahead of time. Okay, price reversal alerts way ahead of time using our algorithm before they actually happen. And in a minute, I'm going to show you an example of what I'm talking about. So before they happen, we provide those alerts. Follow us on Official Trade Setup on Instagram. If you'd like to join our community, go to thetradesetup.com. You can sign up for a 2-week free trial, and they'll give you access to Discord, our algorithm plays, our algo bot, which gives out reversal alerts. And then if you enjoy this type of content, please give us a subscribe on YouTube. Our channel is Trade Setup. Okay, and then with that, let's take a look at the Twitter account. This is more so to kind of prove that our system is really that powerful, and the foresight and the advanced insight that we get from our algorithm and reversals really keep us ahead of the game, right? We have information that most retail traders don't. So, if we go into Google, let's go into Twitter. All right, so we go in here and let's go. Let's go into Facebook thread, right? I'm just gonna keep going into this thread until we find something that's original. Here we go. So everything is time-stamped in the timeline. So 303 February 17th, we alerted that Facebook would hit 206.20 from our algo bot, and watch this reversal, watch that level, we could potentially bounce. So now if we go and watch that particular level, right, the very next day, we're again calling out because we haven't seen the touch yet. We haven't seen that touch on 206.66. Okay, and so now we're calling it out well before it even touches there. And then you could see finally you see the touch, right? You finally see the touch, you see the accumulation, and we get a straight up bounce. Now here's the beauty. If we continue to watch this, you could see bottoms forming at the same 206.20 level. Okay? And if we continue even further, look at all the bottoms forming. So this was a trade setup put out for free on Twitter with our algo levels, right? So the trade was watch the 206.20 level. If it can hold, you'll have brief bounces and you can play calls to the upside. Look, four bottoms. Okay, so called out way in advance, way in advance before it happened. And this is the type of insight that we provide. Is we provide things that have not happened, and I think that's very rare. We have there's a lot of content out there which is basically news reporting, right? I saw this and I saw that and I see this and I see that, but not a lot of forward thinking, providing a little bit more insight as to how to go about using that information. We talk about what's going to happen, not what's already happened. And as traders, I think that is far more important to know is what can happen so we can manage our risk, right? So I hope you find this information helpful. I hope you give us a follow on Twitter. You could really see the magic in our system over there. And obviously, if you enjoy this type of content, please give us a subscribe on any of the social media channels. And we wish you all the best this coming week. Thank you very much.